Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with news the worldwide surge in producer prices shows no sign of topping out. But first in the US, initial jobless claims came in lower than expected for last week at 278,000, and that leaves 2.25 million people on these benefits, also a sharp drop. This is the lowest since the start of the pandemic. US producer prices rose 8.6% in the year to September. There's probably a little comfort that they were lower than the expected 8.7%, but it pushed higher than the 8.3% in August. A feature is the success that manufacturers are having being able to pass on these cost rises on to consumers. Consumer price inflation might be racing higher in many Western countries in response to the rising demand and high commodity prices, but they're certainly not seeing that in China, where the monthly inflation was 0 in September and the annual inflation just 0.7%. The story is sharply different on the factory floor, however. Chinese producer prices rose 10.7% from a year ago, the highest jump since 1995. Month on month they rose 1.2%, and that indicates that the recent changes are rising even faster. More is coming too. China's authorities have decided to allow electricity prices to rise by as much as 20% compared with the current 10% cap, but rates for residential users will be kept unchanged. This will boost the headline producer prices by 2 basis points in the near term, and by the end of the year it could reach 12% by some estimates. Inside China, and little reported there, is a sinking housing market that impacts Tier 1 and Tier 2 cities like Beijing and Shanghai. Prices are falling fast. Unsold units in their vastly overbuilt residential property sector are staggering, undermining the value of occupied units. Household wealth is about to be hit hard in China from this effect alone. In Australia, consumer inflation expectations have slipped from a high of 4.4% in September to 3.6% in October, according to the Melbourne Institute survey. And jobs and their participation rates both fell in Australia in September, but it is mainly because of a large drop in part-time employment. Full-time jobs actually inched up. The US Treasury 10-year yield opens today down another 3 basis points at just under 1.52%, and the price of gold has moved up another $3 to $1,797 an ounce. And oil prices are up 50 US cents to $80.50 a barrel in the US, although in between it's been quite volatile trading. Meanwhile, the international Brent price is now at $83.50 a barrel. And the Kiwi dollar opens today nearly 0.75 cents firmer from this time yesterday to 70.3 US cents. Against the Australian dollar, we're firmer too at 94.8 Australian cents, and against the euro, we're up 0.5 cent to 60.6 euro cents. That means our trade weight index starts today back up to 73.9 and suddenly back near the top of the 72 to 74 range of the past 11 months. We welcome your feedback on these issues. Leave a comment below or on our website. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.